So, you're broke. Who cares? Entrepreneurship built from nothing makes for the best success stories. The more you flip your negatives into positives, the better your outcome will be, and the easier it'll be to start your business. Hello again. Who's ready to talk about how to form your business? There are many ways to form your business: a sole proprietorship, a partnership, an LLC, a C Corp, S Corp, and nonprofit. For the purpose of this podcast, we're going to eliminate nonprofit. Which option is best for your business? For this next part, you'll want to grab a pen and paper because you'll want to write down the questions that I'm asking you. These will be the foundation of how you pick your formation of any business you start from here on out. There are a few easy questions to ask yourself when you're deciding your formation type. Number 1, is it just me working, or will I have any partners? Number 2, do I plan on having revenue exceed $100,000 a year? Revenue, not profit. Will it exceed $300,000 a year? 500? If you don't have any employees, sole proprietorship is the best way to go. If you have partners, you'll want to either form a corporation or an LLC and elect S corporation status. S Corp benefits allow you to deduct a reasonable salary from your revenue as deductible income, whereas regular LLC/sole proprietors require the owners to pay the self-employment tax. While a C Corp may be best if you plan to go public on the stock market one day, an S Corp can be better for small companies. Each type of corporation has its own benefits and drawbacks, as well as differences when it comes to taxes. If these things aren't familiar to you, you may want to consult an accountant to help you form your business, or a lawyer. Now that you have a good idea of what type of business formation you should use, you're well on your way to getting that business started. Now let's dive a little deeper into each of these types of formations, and we'll explain further the list. Sole proprietors are usually one-man operations as far as owners go. If you have any partners that can claim a percentage of your business, no matter how big or little, you should revisit the questionnaire and likely choose partnership. Partnerships are when you have more than one person in the business ownership legally. If you choose multi-member LLC, it's classified as a partnership via the IRS. Partnerships don't have many tax benefits outside of the general LLC protection of your personal property. If you believe your revenue will be less than $100,000 a year, keep this as your specified option. LLCs are multifaceted. They can be a single-person LLC, multi-member LLC, or an S Corp elected LLC, my personal favorite. S Corp elected LLCs can operate with the protection and the tax benefits. C Corps are usually only for very large companies that look to go public on the stock market, have more than 100 members, and can afford the double taxation. However, if you have more than 100 members, you don't have a choice. S Corps are not exactly a specific filing type you can choose initially. It's called Form 2553, and you file it with the IRS to elect for S Corp status. The most beneficial way to go about this is forming an LLC and then selecting S Corp status. When you elect S Corp status, you avoid getting double taxed on your income as the owner. You are required to pay yourself a reasonable salary based on the job you're doing. The benefit of that is you aren't going to pay self-employment taxes plus income taxes. You'll just pay the standard income taxes. That wraps up the formation process. Once you've filled out the appropriate forms to start your business, you will be ready for the next section of this podcast: accounting basics and how to keep your costs low.